Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, guys and girls. So let's take a look again EUR, because interesting situation is coming back here, surprisingly. But overall, it still stands tricky a bit. So what I do like here is, of course, the price action of today's session right here on the top. And later on the intraday charts, you will see why it is interesting, because potentially, guys, just to going ahead, we could get the double repo lookalike here if our suggestion on the price action will be confirmed by the price. Despite that, here we haven't got close below the 3x3 for a few pips, we still will be able to treat it as the double repo sell, just because of the market mechanics. So the closing below or above the 3x3 is just a theoretical detail. It doesn't explain the overall background processes that stand beyond the price action. If you see the price action that definitely matched to double repo, it's a secondary factor whether the market has closed below 3x3 here or not. This is not some rule of thumb that you should follow. It's just you should understand and see the background of price action that stands on the market. And here we have the good thrust. Here's first retracement, second retracement, and the second upward action. Here's market should make the attempt to break this area. And now we see some signs of that. So take a look on the 4-time frame chart. That is great. The wash and rinse has happened. You can see acceleration was really fast. Market shows minor pullback, then trying again the pass through it, grabbing the steps, now stands in the collapse. So currently, from the hand and shoulders, it seems that we could turn back to possible double top. If we are correct and indeed double repo will start, that could be the double top pattern. This could be formed. On the hourly chart, you could see even better. So here's actually, we do have godly steeple to sell that we talked yesterday, but market, as you can see, has shown it not from the 618 where we said it should be the point where it will be the clarity from the market that it will go higher or it starts retracement. Market was going higher. Complete the XOP of this ABCD pattern, and we do have the guardrails, because take a look, these lows stands below this one, and we have its bit wide guardrails cheaper to sell. That's good pattern. But then as you can see the spike up, scrubbing the stops, and market right now stands in the collapse. So theoretically, this is excellent bearish background in the short-term perspective. But why we call situation tricky? For that, we need to take a look on the higher time frames, particularly the monthly and weekly. On the monthly situation, not stands tricky. On the monthly chart, everything stands very well, if you remember. So market is coming to the COP targets at 110. It's now a 2010 area. So it's now our nearest monthly extension, and probably it will be reached, because take a look, acceleration here on the monthly chart is really great. So we talked about in the weekly report. The tricky moment here is the fib level. So 1820 here. This market's calling ground. That's first point. And second, what's most tricky situation stands? It stands on the weekly chart. Because on the weekly chart, take a look, the same resistance, and we have multiple target cluster just above the market. We have the OP with this ABC bottom pattern, and we have 1618 extension, 2025 of this, let's call it as a butterfly, or anyway, that coincides with the monthly COP target. And the tricky moment stands so that despite that market stands at overbought, existence of the major targets just stands a few pips above the market, so not too far, it's 100 pips just from the current level. It works like the magnet, and bearish patterns that are forming currently on intraday charts at this point, they stand under risk of the possible erasing, since market will gravitate to the targets, and it will try by any meaning to complete this target before major retracement will start. That's why taking the short position, well, maybe reaction will be, maybe market will show retracement, but you should think and understand the risk. Despite all the positive moments for taking the short position here, it's overbought, resistance, washing greens currently that we see currently on the follow time frame chart, possible double top. That's great, but targets here bring additional risk. That's either reaction or retracement will be not as we expect, it will be smaller, or it could be not sufficient. For example, on the hourly chart, or better to take a look at the follow time frame chart, market could start downward action, but stop suddenly in the middle of this range and turn up again. Because major targets on the monthly weekly chart, they overrule the patterns targets that stand on the lower time frames. And that makes tricky the trading on the short side. If only you have a lot of money to put stops above this area. So above these targets. So that's why we call it tricky. But every time, guys, when you see this kind of action and washing greens on the second tap, keep in mind that this could be the double tap. So what we could do in current circumstances? Well, theoretically, if you would like to take the bet on the current situation, you could do. Because you could place relatively tight stop just above this area, because washing greens already has happened. And there is no, and should be no second washing greens, because it already has been done, stops already has been grabbed. And from that standpoint, it's relatively safe. Try and take the short, and if you will get lucky and indeed market turns down, we will get the double top and double repulse sell on the daily chart. Besides, tomorrow we will get non-farm payrolls release, and if you will be slightly positive, or at least in a row with expectations, well, maybe some retracement starts, because all market stands are extended. Euro stands in the ultimate top of the net long position. Gold stands on the high ultimate top of the long position, or near it. So the background for retracement is ready. It should be some triggering factor that could trigger the pullback. Well, that's our view on the euro currency. And well, here's you have to make your decision on using this situation. Whether you will be just sitting on the hands and see when the market hits the COP on the monthly, and then trying to catch some bearish pattern reversal and take in the short position, or you could take more risk and trying to sell on the top, but with all risk factors that I just have explained. So let's see what we will get today and tomorrow especially.